All right, let's see. Still kind of just getting this set up here, so making sure I could hear myself and things like that. Check, check. Cool, all right. We should be good then. Nice. What's up, everybody? Appreciate it, man. Yeah, it's good to be back. It's been a while. I have missed it, to be honest. All right, let's see what we got here today. Let's go ahead and clear this. We'll be working within a paper trading account, so I'm just going to set this back to 0 so it's easier to see. Just for the trading purposes, or for the YouTube purposes. Hello? Maybe I'm done. How do I reset? Okay. And I'm just mirroring the account sizes I have currently. So I have 300,000 through Apex. So we'll just use that so you could follow along. No news today. As I mentioned, first day back, so we'll kind of take it slow. Nothing too crazy. Just when we want to get back into reading order flow, right? If we take a trade, as I mentioned, we'll share it through the paper trading platform. Less risk for me, of course, and you guys. As far as bias, though, we're going to open here in 3 minutes. So let's kind of go through that. Whereas if I hide everything, pretty obviously, I'd go bearish off the open. But if we kind of just zoom out, we've ran into this order block here on a higher time frame level. Into this wick, actually. We reject from that. Right, you notice we clear highs here, we clear highs here, displace lower. And now we're holding that 4-hour fair value gap. So we held that yesterday. We accelerate lower again, daily volume imbalance. So for me, my attention would immediately go to this low. All right, I want to see if price wants to reach for that. Get back down into it. Of course, could see some hesitation off of the 4-hour fair value gap. Like that. 415. Okay. Whoa, too much going on. Let's go to that 1 minute. This level here, I'm actually going to move these levels. This was a daily wick. I just kind of want to show you guys what I was measuring. All right, so I'm taking this wick and then I'm superimposing basically the quarter levels of that wick because those are going to be important levels. And now as we kind of work through the time frames, you'll see that, right? We use that, basically that lowest quarter level to reject as we head into the morning right now. So yeah, let's see what we get. As we mentioned, this becomes really the external range liquidity that we had brought up. So we're going to go ahead and label that. Let's move that to the right. And now, new day opening gaps. And this large area here, as we mentioned, this is the 4-hour fair value gap. So we can expect some type of bounce from here. As we mentioned, no high impact news this morning, so we don't really expect anything crazy off the opening. I still want to see price continue to run lower though, however. Wouldn't mind a retracement into this little fair value gap potentially. And then we'll see if we want to start breaking lower. So there's line 30, this white box that just popped up, this is going to be our regular trading hours gap. Right, so we often use this if we're looking for just kind of a reference point that price may trade into. We'll often find that it wants to return into its consequent encroachment, this midpoint here. So honestly, right, I wanted to see this sell side. But if we hold off this 4-hour fair value gap here, especially after clearing liquidity, okay, notice how as we cleared this low, we have yet to close below that. That's pretty important. So we've cleared that liquidity, but we haven't actually broken below that. That is sell side. Choppy opening, so yeah, as we said, not really in a rush. More so just getting back into talking out our thoughts and things like that. This is a new day opening gap here, so I do like the idea of, okay, so if we were able to leave a fair value gap there, that already potentially could have been used, right? First presented fair value gap. It is a 930 candle, so we wouldn't really use that, but that's okay. Holding that new day opening gap. We'll see what we get. As we mentioned, right, we're looking at this fair value gap because it's within our new day opening gap. And you'll notice how once we close above that, we can expect that to act as an inversion, especially because it's already inside the new day opening gap. So we come back into it quick. Look at the precision hitting that new day opening gap low perfectly. Now we're most likely going to want to accelerate. So as we mentioned, consequent encroachment here, the midpoint of these regular trading hour gaps tend to be traded into. Notice how we have a high here, right? Look at these equal highs, clean. So if we do start running that, right, my eyes immediately jump to that, because you'll notice, as we often say, things aren't random. The fact that we have these equal highs sitting perfectly aligned with the midpoint of that gap already, that's pretty interesting. So I like that idea. Breaker here. Low, high, lower, low. We clear lows, we accelerate. So honestly, that already right there could potentially be an entry point for us. Let's see. $830 level. For now, I'm gonna kind of move these quarter levels just because. Yeah, just to clear up a little bit. We'll bring them back. Equal highs here. All right, so now if we're gonna continue to push, easy targets here. You go equal highs. You then just keep looking for other buy side targets. Right? Once again, equal highs. Notice how none of these highs were able to clear that original high. Right, so relative equal highs in here. And then finally up here, as we mentioned. So we'll just keep looking to see if those want to get targeted. We're gonna move most of these though. Just clean it up. Right, for us, potential entry here. First, so the first presented fair value gap. Clearing sell side into a higher time frame fair value gap. Displacement through, leaving a fair value gap in the displacement leg. Pair that with right, up close candles breaker here. So that already to me would be valid to look for entry. And then I really do like that midpoint of this relative. Yeah, these highs up here. Clear the lows. Clear the lows again. So yeah, reach should be here. We may not get the entry itself, which will be, you know, it is what it is. So let's see if we want to get this buy side. Should get that pretty easily. All right, there's the first buy side. Notice how we've closed above that. That to me is pretty telling that we're going to continue to run. So those that have been here in the past, right, we often speak about when we approach highs, liquidity levels of any sorts, could be highs or lows. We're really wanting to see how price closes near that. Right, let's say that this candle wicked through the high, closed back below. That to me is more kind of bearish for this short term. Right, but if price is already willing to close above that liquidity, more than likely we are going to want to continue to run at least for this liquidity up here. Right, so that's kind of what we're looking for at this point. See if price doesn't want to keep running. We can't get a retracement because we have hit this liquidity. So right after running into short-term highs, we can then retrace into the original kind of objective that we wanted to see price return into. And then from there, we can continue to run. So I'm not worried if price starts retracing. Right, that'd be fine. Of course, if we're extremely bullish, price is just going to hold from this high, kind of like we're seeing this body. So now we're just monitoring this candle and watching the same thing, right? Does price continue to really use this as an area of support? Equal highs now turn into support as we close above it. Or do we want to give a slight retracement potentially back into our fair value gap before running again? So at the time, kind of just creating a 5-minute fair value gap. That's what we're looking at. If I show you on a 5-minute chart real quick, just so you can see. Same idea. The 5 minutes actually close above that as well. So for the time being, right, we're more than likely going to engineer a fair value gap here on a 5-minute sense, which actually I wouldn't mind either, because then that'll give us kind of a higher time frame area to use as well. Right, when we're looking for these PD arrays, we often want to see them kind of align with one another and stack on top of each other. So if we can create a 5-minute here, along with now, right, the 1 minute and our breaker, I like that a lot. We'll leave that there. $830 level may act as an area of support as well. So we just come into the inversion. Okay, so we had an entry set here. I may still leave it, but you'll notice that we've actually used this inversion that's aligned with our 830. So we were monitoring this. Right, if we're gonna blast right through that and use it as support, we can use it as support again. I did want a deeper retracement, simply for preference, right? Better risk management. We don't get that, that's fine. Instead, we kind of hold at this area, as we mentioned, 830 paired with an inversion, and now we get another leg higher. We should run into this buy side now. Running into that last premium we often speak of before liquidity, gives slight hesitation, so small fair value gap in here. Right, holding there. More than likely, we should accelerate through that. Five-minute has now closed, and you'll notice that. Let me show you the 5-minute. So now we have our 5-minute fair value gap here. So honestly, I still would not be opposed to a retracement entry. We're kind of going to work top down by starting with that 5-minute. We have 5 minute here. We also fell short of that buy side, so I do like that. So the 5 minute aligns with that 830 level. Consequent encroachment of the 5 minute aligns with the 1 minute. So I think we're still going to use that 1 minute. As we said, not really in a rush. So if we do miss the entry here and price just continues to run, that's fine. We're on sides. It's really more so about being on side with order flow this morning as we get back into it. For those that know, volume imbalances are very important. Okay, if we could get it set up. Hello. Take a look there. Continuing to monitor volume imbalance holds us or not. But yeah, I like that for entry. All right, so I would wait. If I don't get the entry, there's no entry for me. Right, you can use the volume imbalance to target the buy side. Just kind of a short move. Now we wait. Love it, love it. These are the moments we just wait, not much to do. As we mentioned, I still want to see us get into here, especially if we left these. If we were able to leave these relative equal highs, meander back down into this area, I like that a lot. Now, granted, NQ also did not. Okay, I was going to say NQ took those highs, but NQ is kind of in the same spot as well. We've cleared these internal range highs, right? The obvious ones that we mentioned, equal highs, once again, equal highs. This becomes our external range that we're looking at, even though it's within, right, a larger range. You kind of have to understand how we pyramid that. So yeah, I mean, honestly, I'd like to see us stall out here for the short term. Make your way back down into this discount here that we want to see price hold from. Give us an entry. And then from there, look for the acceleration to clear out the buy side. And as we mentioned, potentially come back into the 50% mark. Right now, we're probably sitting right at the quarter level of it, at the 0.25. So if I was to basically cut these in half, I take the midpoint, take the low, you'll notice that that level lines up with that buy side high as well, which is why we're seeing price kind of spend a lot of time here, right? It's an important level. Still playing here. So we've just come back into that high. Right, we can use that, as we mentioned, as support if we want to. Obviously, pretty ugly price action here. Okay, and there's the tap into that area. Now we'll see if we want to aggressively hold that or if we want to run up higher now. I like the idea of holding that to get higher. That's pretty aggressive wick. Was that? I don't really know why. No news or anything. Interesting. Okay. I like that though. So that's really what we wanted to see, right? I got entered there. Right here on this, we use that 1 minute fair value gap. Now at this point, we want to see if price is going to respect the 5 minute. Right, because really we're just returning into the 5 minute, as we said. We've cleared lows, we go up higher, we can retrace. So this retracement isn't surprising. It's just a matter of how deep we want to go. In theory, right, stop loss would be underneath, in my opinion. I would go this down close candle here. Although we have this wick, right, so in theory, this would be the low to protect you. Right, so we use that consequent encroachment. It's just a little large for my liking. And plus, if we're going to basically return into this wick, more than likely we're going to want to get lower. Right, the fact that we kind of moved higher already, I wouldn't want to see anything lower than really this new day opening gap here. If we do, more than likely, right, as we mentioned, we would immediately go back to looking for sell side here. Because we've cleared buy side. If we've cleared buy side, we fall short of this buy side. And now if we're going to overtake the discount that was created this morning, right, we would look for that to become an inversion to now propel us lower. So that's really what we're kind of watching here. We had slight SMT, okay, so this high to this high. For those that aren't kind of aware of that, we're looking at NQ in relation to ES. So this high here falls short of this high, whereas at NQ, if I was to show you real quick, right, we actually ran that high just barely, but it's enough. Right, so now, as we mentioned, especially if we want to accelerate back below new day opening gap, we would look for that to basically act as an inversion level. We're going to take away the 5 minute because we're really using that 1 minute first presented fair value gap on a 1 minute here. So we see what price wants to do. We've come into it. We've come into the new day opening gap. So to me, if we're going to want to really return bullish, we should start attempting to now trade back into this bearish fair value gap here. Right, you'll notice once again, it's aligned with our 830 level. So we're creating premiums aligned with higher time frame key levels. Right, so if we close below this, we retrace up into this. We want to see what happens here. Create the wick, and now we get through the wick. Let's see if we close below that. Closure below that. Okay, that's pretty interesting. So now to me, yeah, that's more bearish. Ooh, 5 minute as well. Yep. 5 minutes closed below that in one swoop motion, clearing highs. So now our original intention could go back to that low. And we'd want to see if yeah, I like that area. At this point, right, if we're wanting to see price move quickly, although we have a fair value gap up here, we really wouldn't want to see price come up into that before taking out this low, or like before wandering lower into another new day opening gap here. Because if that's the case, right, we're really not in a trending environment. We're just going to continue to consolidate, which we've already moved a good amount off of our new day opening gap. Right, so when you have kind of a larger overnight move, we can expect choppiness. So it's just a matter of seeing if that comes to fruition. Right, so we're able to run out that low. Nice. Notice the speed with that, right? No retracements. As soon as we clear the high, immediately targeting lows here. This is why I often like to wait for confirmation as well in areas like this, right? For those that have been around. Once price moves away from our original entry point, this 1 minute, if we're going to return into that, we need to see some type of confirmation that price wants to hold and run away. Nice, okay. That's good there. Fall short of the high, that's fine. So now in a higher time frame sense, high, low, higher, high, we've broken through that. We're holding inside this new day opening gap, of course. But yeah, that original sell side we had, that was inside of the 4 hour. Right? That's looking pretty juicy once again here. 4 hour candlestick, yep. To clear up some of this, make it easier. Oh, okay. Did not mean to switch, go back. Cool, all right. So now same idea. Right, we fell short of the midpoint, but we did get into that quarter level as we said. Original idea was bearish. In the short term, we wanted to see if this little run lower, right, acceleration would hold bullishness. It doesn't. So now we basically go back to that original idea of sell side. But with the idea that this whole run here was simply to target that buy side. Even though we fell short of this high, we were able to pick up these highs, right? We picked up these highs and we picked up these highs while returning into that quarter level. So that in itself is fine. Displacement lower. So yeah, we're just going to keep looking for that run lower. If we can break below the new day opening gap, that should free us up to continue to kind of slide lower. And once again, as you mentioned at this point, definitely wouldn't want to see this be traded into prior to this. We're also just going to be kind of a long morning. Thank you, Sharky. Appreciate it. Did we get a close? We did. Look at that. Closure below. Okay, so from here, yeah, let's see if we want to keep running. My attention goes to this wick paired with that fair value gap. So if we do want to give a retracement, really that's all I'd want to see. Right, maybe new day opening gap here, but if we start venturing all the way back up into this fair value gap, I'm not really a fan of that. I want to see sell side be targeted here. Right, potentially something like breakaway here. Five-minute closes on the new day opening gap. Let me show you that. It'll pop up for us. There it is. Perfect closure on this low. Tapping now its midpoint. So from there, let's see if we just want to dive now. As we mentioned, wick with this fair value gap, wouldn't mind returning into that area. That's a potential area for resistance. Yeah, it's been quite a bit. It's been probably, heck, when was the last? Over 6 months. October, November, I can't remember when the last stream was, probably October. So yeah, we'll see if we want to come back into that consequent encroachment of it. As we said, if we start wandering through all this here, what's that? Yeah, okay, like that. $10 months, holy, July? It's been that long. Oh my. I don't know if it's been that long. It's been a minute. Been grinding, fellas. So as we mentioned, there's that wick that I was looking at. Paired with that fair value gap. Da 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 da. Yeah, NQ clears. July still, that's a long time. Yeah, as Michael said, right, NQ did take that low as well. Lock back in real quick. So we're aiming for this low, 4 hour since. Look at NQ though, leading the charge. So NQ just tapped that. All right, and I had that marked as well in NQ. That's that level there. So if we go to a 1 minute sense, you'll see we've just barely swept it. I think if we're bearish, right, we should get another move lower from there. We'll see. If we start running, that'll give us a pretty good indication that we're most likely just going to keep kind of wandering, chopping here this morning. But for the time being, right, we wait and see if we can hold this. We'll see if we get more of a six sister where, right, ES also wants to get this low and Q's just leading the charge. So if that's the case, right, ES should try to catch up, at least clear these lows. In my mind, if we can clear these lows, as we mentioned, close below this new day opening gap, we should be good. Although we get a closure here on a 1 minute, this is why it's often important to understand where we are in the sense of, right, multi-time frames. Because we don't want to rely purely on that 1 minute with the fact that the 5 minute itself was unable to close below that. Maybe. I'm frozen. Hello. 1 minute. There it is. Find it. Boom. Right, so 5 minute, unable to close below. So if we can get a 5 minute to close below, then we should really be free to get lower. Especially as we mentioned, this right here, immediate rebalance. We hit this candle's wick. So it's a pretty strong algorithmic signature, especially if we were to hold below that. We shall see, we shall see. Are you permanently back now? Hopefully, yeah. I hope so. Be back for a few months, at least some time. Went through some things the past few months, been struggling, grinding it out. But yeah, we back, fellas. In case anyone ever wonders, trading does not solve all your problems. Let's just say that. Ba-da-ba-ba-ba. Nice, nice, nice. So as we said, we want to see if we can get this low here at least, and then initially, right, we want to see price run all the way into that sell side there. We hold beautifully from that fair value gap paired with the wick. Why am I looking at this? As you guys often know, wicks we can see as gaps. So when I'm seeing a wick, right, my mind almost interprets it as a fair value gap, even though in theory they are different. They're going to react the same way. So now when we have a wick here, and it's perfectly aligned with, right, our 930 opening, that already is going to be a pretty important level. Right, it's also aligned with what else? The original sell side that we had cleared. And what else? Right, a fair value gap in here. So that's why, even let's say we rip back up through this, that's just why we're seeing this hesitation here. It's going to be an area where price, if we want to remain bearish, should find some resistance, as you can see here. Once again, though, refusing to get below low of the new day opening gap. So now just really fighting between two PD arrays. You know, which one wants to, I guess, take priority? We'll find out. Yeah, once again, SMT. Right, so a lot of SMT this morning. Happens when the markets are kind of uncoupled, moving not with one another. That's fine. I mean, a little higher than we thought, but we're still not really convinced because now we do have these lows, even though NQ did clear that. For us to be convinced of that true kind of bullishness, we're going to need to see, as we mentioned, new day opening gap would have to get retaken here. We can move this because we're really just looking at the wick. You'll see we close right on the high, so this should be pretty important to me. Right, you'll notice we also have within that. So you'll see what price is kind of hitting. Da 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 da. Aggressive wick, aggressive wick. Still no closure, interesting. Bearish volume imbalance and bullish fair value gap. So now I'm very interested in that here. If we can retake that, I think we get these lows. If we hold this, more than likely we're going to want to continue to run, at least into the 830 again, before we see some type of sell-off, if that's the case. But if we truly are bearish after hitting that new day opening gap and kind of stabbing back up into this regular trading hour gap, we want to see bullish PD arrays like this be invalidated quickly, right? Which means that we don't want to see basically what's happening here. We want to see price dive right through that, almost like we saw like here, right? When we have a fair value gap that kind of just gets traded through. That's what we would like to see. Same idea here, right? Bearish fair value gap, bullishness trades right through it. So I want to see if we can't accelerate through that with displacement. We don't want to keep wicking, and we especially don't want to struggle to get into its consequent encroachment, because that right there is pretty bullish sign. Tapping there. Okay, I like that. As you mentioned, SMT with NQ here. So yeah, if we can't get below this, more than likely we're going to want to accelerate. Right? NQ is kind of trying to set up a bullishness play here. It's getting stuck at the same area, however. Relative trading hour gap, new day opening gap, bearish fair value gap, right? Bearish breaker. So we're really in the same area within the two, besides the fact that NQ was able to clear that low. Same idea, right? Especially because we've rejected so hard from this new day opening gap. If we're going to accelerate through this wick especially, that to me is bullish. Right? So more than likely we're going to be looking for some type of run into this. We've closed above that fair value gap. So that to me already more than likely wants to use that and then accelerate. Okay, yep, kind of as we saw there. High taken again. So yeah, just methodical. I'm going to move the trading. Let's turn this off for now. Cool. Just to clear up some space, right? We understand where that area is. It's right here at this opening. See if we can get above that. Closure above, as we said, sets up potential longs into just that area we were looking for, that untapped fair value gap. Do we get above the wick? We don't get above the wick. We might try to use, let's see. Trying to get at least one entry here. Back into the swing of things. You guys know me though, I don't like to see these type of movements with wicks. I'd rather much as, like if we closed above this high with this candlestick, I'd enter right here. I don't like that we weren't able to. We were able to get above that original bearish fair value gap, however. We fall short of consequent encroachment, so that right there, as we mentioned. Bullish signature, holding the original, right? Notice where else that 1 minute fair value gap aligns with. That's the 4 hour. So we don't want to get too lost here. We have a lot kind of going on. So I try to keep it a little bit clean, but still struggling to get above the wick, right, with a closure. So trying to come back into this original little fair value gap, right? As we mentioned, this is a 4 hour as well, so. Pretty methodical delivery at this point. NQ, kind of in the same area. We've just tapped the low of that relative trading hour open, or regular trading hour, excuse me. So we'll see if, okay, my eye goes here. Right, bearish volume imbalance created, aligned with new day opening gap. So I'm gonna see if we don't want to get above that. Which if we did, maybe that becomes our entry here this morning. Let me try it. Just something slight, right? A little ends model. Pretty tight stop here, right? That'd be using this low. High risk. Can we close above that high? We do. Ooh, no retracement though. Okay. Oh, well, there's that fair value gap we were speaking of. Honestly, I'm not very convinced. That's a lot of lows, right? You'll notice in this delivery higher, not one low is taken, right? So low created, higher low, higher low, higher low, and now we've delivered into that premium. I mean, we can maybe just keep taking these right higher lows, but that seems awfully fishy. I want to see if we don't want to at least clear one of these lows. We'll give a rejection from the 830 paired with this fair value gap. This right here is pretty much a clear-cut YouTube model. Short-term high cleared, displacement through a low, fair value gap left behind. Right, because the underlying premises is though that we may want to reach for this high. This is why something like this, or like if you wanted to just go short, this would be a real high entry or high risk in my opinion. Because price is kind of showing an unwillingness to hold at premiums. And it seems as if we're reaching for something here. So this is a case where, right, even if I'm bearish and I was expecting to see something like this low get taken out, I'd wait for some type of confirmation off this fair value gap. Because we don't want to see price just blow right through that. Right? Especially how price has held this institutional order flow entry here. Right? Not even trying to get into that consequent encroachment. Accelerate away. Disregard a bearish volume imbalance, one up close candle right through it. So if that trend is going to continue, right, we would look for now this fair value gap to maybe offer us a speed bump But if we truly do want to get back into these right highs that we had mentioned, price may just kind of accelerate right through that quickly. Kind of like this area right here. If we were going to come back into this, yeah, we'll try our first little entry here. So this is with the understanding that we're going to expect basically lows to hold. This is where retail traders sometimes are correct, right? Following trend lines per se. We understand it's not respecting the trend line. We're respecting the discounts that are being created along the way. So this, I wouldn't want to see the 4 hour be hit because we've already traded into it. We may get above this though. I like that. There we go. Always percent risk. I like to do 0.5% on my entries. Okay, we'll leave that. See if we get one. Oh, now we run. Price really just running. One entry here. Now this, right, may be the actual down move. So we spoke about how this may be the move lower. This one may have been that move lower to clear now this sell side. Still falling short of this, but at this point, right, we've cleared sell side here, 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 and now here. Really no need to get into here, which is why I'm okay trying to enter on this retracement. We may kind of just hold straight from this though. Right? This may become our inversion like this, and we may run straight into that buy side that we were looking for. We'll see what happens there. We'll still wait for that retracement. I like that, but well, we understand that could take place. Inversion used to now accelerate us into buy side. And then as we mentioned, this high here, still really, we do have our, I'll bring it back now, regular trading hour. Like these. Boom. And clear these, you guys kind of understand, we're looking at that. Clear this for now. Okay, we'll see now. What do we get? We got the M at the 3 minute. Okay, I like that. Yeah, NQ, get a pretty good entry too, honestly, on a 1 minute set, if you were looking at that. But that would kind of be the YouTube model as well there. Institutional order flow, quick tap, run. We're inside of now that new day opening gap. You'll notice that this is the same for value gap in ES, right? So we're kind of holding an NQ, whereas ES, we got above it. So we'll still want to see what happens. As we said, if we're going to kind of just accelerate this inversion, more than likely will hold us as support, I mean, anyways. We'll see if we can get another candlestick, down close candle inside of that inversion. So now if we're going to break back above it, this is kind of where I'd look for confirmation that we want to run long now. Yeah, it's a good question, actually. How far behind are you guys? Right now, right, 10:15. It just turned 10:16. 15-3. Oh, what the heck? Huh. Yeah, I mean, I have it set on the lows, I'm pretty sure, so I'm not sure why it'd be different for some of y'all. So there's a closure. Ooh, okay, we might try to use that actually. If we're gonna trade into this, hold 830, bounce off 830, inside of an inversion, negate the breaker, leave a volume imbalance. I'm fine trying that. So we're gonna go ahead and try an entry here. Try to at least get one this morning. I mean, that in itself, right? Ends mark. We could do that easy. Hello? 6.5, but I mean, I still like that up there. 15. Yeah, we'll go like this. If we can get the entry and then we run, we'll take some off and hold for the high. That's what we'll do. If we run for the high without allowing us, I don't know. It was 5 at the beginning, now it's 10. Damn. Yeah, I don't know why it does messes up like that. Okay, there's a wick. There's that buy side. So let's see. I want to see us close above that. And keep running, to be honest. Which if we do, we're not going to get that entry, but that's okay. You have YouTube Premium. Yeah, it should make it 5. Yeah, that was the only downfall with YouTube, to be honest. But at this point, I'm kind of trying to build up that YouTube presence a little bit more. Because honestly, fellas, I'm kind of in the same spot most of y'all are. Right, the last few months have not been well. Most y'all in here are OGs though, which is why I feel comfortable talking with y'all. Right, to let y'all know, trading ain't always sunshine and rainbows. Matter of fact, I've lost probably a majority of my profits the last 8 months. We're gonna fall short. That's fine. We'll see if we keep running there for that high. Let's go, Mike. Hell yeah. That's what I want to hear. Always love others having success. It happens, AR. You good. So I figured I'd share it, right? Let others know it happens to even, I wouldn't say the best of us, but someone like me, right? This is my 8th year trading. And to be honest, it was mostly personal. So I had some personal issues, right? That bled into trading, which then caused my trading to suffer, which then, right, guess what? Snowballed into more personal issues, which then led to more aggressive trading mistakes. And it wasn't until I kind of rebalanced myself, right, mastered myself again, that now we're back into having success. So really, I'm kind of starting fresh with y'all, right? I have 2 300K accounts right now. So I have 600K in funding, and we'll see if we can't build that back up. Hey, no need to be sorry, brother. It was all me. Well, damn, why don't we try and... We could try and Q, to be honest. Should we? We missed that entry, so we get the run that we've been looking for. But we miss it. That happens. Unfortunate. But the original kind of objective was we wanted to see this level get hit. We fall short of it, but as we mentioned, we're holding at a new day opening gap here. and we've cleared already a lot of sell side. So when I said, right, this would really be our flip point. Once we closed above with this candle, that kind of set into motion the idea that we want to keep running. We close above here, that is extremely bullish. And from there, we get that quick run up. And NQ is same spot though, actually. No, wait. NQ is actually behind a little bit. So we may be able to, let's go to NQ. This is going to be a crazy entry, but this is kind of forced. NQ has yet to trade into that high, and we actually still have room to get into the midpoint of that regular trading hour gap. So where could we enter here? All right, a lot of entry mechanics. Wick, volume balance, fair value gap. So I often look, right, if we're going to create a wick like this, as we run a high and then we expand through that wick, we should not get back below that. We have a volume balance inside of there. However, we've created another wick pushing through with a new volume balance. We could do something crazy like that. That'd be aggressive. Nah, just for fun. We'll follow NQ here. See if we can't get into that. And just keep running, just keep running. So we get buy side and NQ. Do we fall short of? We'll see if we can't get into the midpoint of that. We should get in there. Don't forget 19903. Yes, sir. What's that? 199. Perfect. I like that a lot. Yes, sir. Good play. We'll see if we can get one last stab up here. Hey, respect, Mike. Thank you, thank you. No, I'm excited to get back into it though. Right, kind of another reason I did this was I found, for me anyways, like looking back now, that when I first started streaming, I wouldn't say my trading was better, but talking through thoughts just makes it a lot easier. And you honestly stay a little bit more disciplined, in my opinion. And plus, right, I've spent a lot of time learning this skill, so why not share it if I can for others that may find it useful. Playing off that high, yeah. At this point, pretty much done. Right, so yeah, for us, we'll kind of share the actual entries. 2 losses, 1 win. Win pays for the losses. Love that. That's trading. How do I change? That's one thing about YouTube. How do I change screens for y'all? Let's see. there we go. Okay. All right, so originally, as we said here, we get entered, we get stopped. I moved my stop loss right below this new day opening gap. Because as we mentioned, although you would expect, right, and it's perfectly valid to have your stop below this wick, for one, that's just a lot of risk to be open with. And for two, if we're going to get below the new day opening gap, more than likely we're going to run lower. That's what we get, right? So for me, my stop loss is tight, like this. So as soon as we get below new day opening gap, we're out, 0.25%. As we mentioned, here was our second entry now, looking for shorts to target the original sell side as we move away, right? And we're kind of playing around here. We're moving our stop to this high. So we get the original entry, we fail, we close above, we create a wick. Once again, we're cutting risk, so we don't take the full stop. That's kind of my whole thing. We're professional losers. So if I can cut risk, if I know I'm off sides, that's what we're going to do. Right, so the original entry was like this to target sell side here. So let me get that for you. Right, so we're going like this. As we create a new high, we then cut that risk almost in half. So on both of these losses here, we're taking less than what our original stop out would be. And then now as price runs here, right, we close above that inversion. Pretty easy entry, just an inversion fair value gap entry. As we mentioned, this would be pretty clear cut. If we're going to get above this bearish fair value gap, we're going to want to run for highs. And that's what we get. So we enter on that, we partial out here at buy side, and then we close full position at the high, which is also the midpoint of the regular trading hour gap. And now we kind of just meander here is what I'm guessing. What's your average hold times in trading? Personally, for me, I mean, I would say 15 minutes, to be honest. Like, I've hardly ever been in a trade that lasted longer than 20 minutes. If it does, more than likely I'm off sides. Because with the way that I trade, I'm often finding out quickly, right? Like, I mean, perfect example here. Entry, I find out I'm wrong 2 candles later. Entry, find out we're wrong, right? 4 or 5 candles later. So it's within 5 minutes each time, even on the profits, right? We enter, and that whole trade duration is what? Let's see. Okay, what? 10:14 to 10:20, 6 minutes there. So in total, 30 minutes, less than 30 minutes of active trades, and that's with 3 trades. But it's really up to you, Cal, I guess, like what your preference is. If you find that your trades are often in profit and then running against you, though, I would suggest trying to at least partial, right? That's kind of what I like to do, like this here. To where, yeah, full objective, of course, was our midpoint, as we had mentioned, right? We're expecting price to hit that external range. But why not secure us profits? And especially if, right, you already had some losses. So like this, me securing this little partial here pays for these 2 losses. So now I'm already break even, which means that now, right, the final contracts that get closed, all profit. But yeah, we may, trying to think, we may just call it there, to be honest. Join you, Mike. Both objectives were pretty much hit. Let me go back to ES real quick, and then we'll kind of just have a little recap. You saw watching the old streams at the chain. Oh, that's pretty cool, Mike. Okay. I guess I didn't even think of that, but yeah, I'm sure people that were around the whole time could probably also notice some type of change, which is cool. Yeah, for me, it just made me be a lot more concise with my thinking. Concise and also, I guess, assertive, confident, right? It's hard to come out here and call moves in front of people and say what you expect is going to happen if you don't have the confidence behind that. So thank you, Sharky. Damn, see, y'all got me hyped. I forgot I missed it. This is what I did it for. Helping other people. I like that. I just know for me, trading was probably one of the hardest things I had to do. Learning, anyways. And you guys obviously know, right? You still never perfect it, but if I can make that learning process shorter for other people, that's huge. We're going to want to go for high. We might go for yesterday's low. This level here is previous day low, right? That's going to be a pretty significant area in price. So now as I'm watching over here, we wick into the midpoint. We trade lower, we displace above. Honestly, we may just kind of meander here for a little bit. Or get that consolidation. Shoot, I'm almost tempted to try this though. What's the midpoint from? Oh, that's the quarter level. Okay, look, if we were to take, right, so basically the midpoint to the high. Yesterday's low aligns with that. As we said, that's not random, right? Same idea that these highs aligning with this is not random. So to be honest, I do think we get there. We should reach into this previous day low. All right, let's go to a daily chart real quick, just so you can see. So we've wicked into the wick. Yeah, I like the idea of getting that. Okay, let's go back. We might miss. The entry would have been right here on this candle, like that, to target. But as we often say, wicks blasted through become gaps. So let's watch this, like that. Especially if we are going to overlap gaps, right? And, ooh, okay, hold up. Maybe. Don't expect price to return into the midpoint as we, oh, we're going to run. Yeah, missed it. We back, we back. Yeah, to be honest, I want to build this YouTube up a little bit more. Right, because as I mentioned, I'm kind of in the same place as y'all now. Starting fresh. Granted, I guess I have a lot of experience that'll make it easier, but my whole goal here is to really just stream most days. Try to build up a little following, right? If we can use my YouTube as another source of income to not rely on trading, that's only going to make the trading better. And honestly, that's kind of an issue that I ran into in the past, is that I was good at trading and I relied solely on trading for all my profits, which it worked out well until it doesn't, right? And that's something I had to learn the hard way. Oh my, I didn't enter. We should have entered right there. I'm sidetracked. We'll watch it though. We just tape read now. But yeah, we are bullish. We should hold here. Like if we come back into this level, we're just going to consolidate heading into 11 would be my guess. So we can close it out. But for the time being, let's see if we don't want to hold fair value gap with wick. Did NQ get? Okay, so NQ was able to get into its midpoint. Let's go to NQ real quick. Regular trading hours gap, right? We hit the midpoint there. So actually, yeah, I mean, we're still there. If then statements, right? So if price closes below the wick and returns into the midpoint, then we should see price try to get back into some discounts that we left on the way up. That's how I like to operate, right? If then. That becomes inversion. Crack me up. Thanks, Mike. Appreciate it. But yeah, it's kind of what I was thinking, is that it'll be a good little lesson, or it's a good nah, I'm kind of glad I went through it, to be honest, because now I know I won't make that mistake again. Builds character, as I often say. Building character. The market will always find a way to teach you when you think you know it. He says strip club manager. I know you make him bread. Look at that. Okay, so we go back into the wick. What time is it? 10. Yeah, we'll wait till 11. I want to just see what we get at the 10:50 to 11 o'clock macro. We're labeling all these PD arrays, but as we mentioned, when we clear external range, so right, why is this an external range? Well, this high clears out, right, all these highs here. And then we run all the way down into this low. So this becomes external range. All these are internal ranges. And that's why we often see once we hit external range liquidity, price will often stall out because it's already done what it's trying to do, right? Unless we obviously have objectives like up here, but price has already done a lot of movement. Or like if I just kind of hide everything, a lot of back and forth. Really seek and destroy. Like if you're just looking at this, right, you would say that's more seek and destroy. And that's why we kind of expect price to just chill here for a little bit. We still have yet to close underneath that, so that's interesting. Just watching. Clear all this, to be honest. We're gonna move the gap again just because we can already see it. We don't need it. Move all this, just kind of keep the key levels. So I want the midpoint, which is also buy side. I don't need these or that. Displacement below this level with a fair value gap, or I guess any really premium would be what I would look for if I'm going to go short here. Not saying I'm going to take a short, but just right, I always kind of like to run through these scenarios in my head so I'm never caught off guard. Practice reps all day. But yeah, like so for me, right, let's say that price was to displace underneath this, leaving a volume imbalance. I'd like to almost use that to then target. What would we look for over here? I'd go right for this buy side almost. Of course, we're not doing this, but yeah, you could really see how price is just continuing to reference that midpoint level. I've also been learning how to code these last few months. I don't know if any of you guys do that, but I want to build my own indicator. And I want to build my own trading journal that will allow me to like do whatever I want, you know what I mean? So it's picking up another skill set. Boring, boring, boring. All right, wait a few more minutes. Like I said, I just want to really see what happens at 10:50, and then we'll call it a day. Let's get some tunes. Okay. Let's see if we still right. The idea of coming for this is yet to be invalidated. We have not closed below the midpoint. This candle tried to, right? Notice that. And these are the kind of like the little things I'm looking at that give us some signals. This candle actually opens with the bearish volume imbalance below it, but you'll notice, right, where do we close? Right back on that. So I just like always seeing little algorithmic signatures in price like that. If we could have cleared this low, what's NQ up to actually? NQ didn't clear that low either. midpoint. Say we're done. We're testing that low, maybe. Nah, just not worth. Personally, to be honest, no need to force. Made our profit, right? Was able to climb out of drawdown, make our profit for the day, so we secure our profit. No need to continue to hold. But we will follow this. I like the idea of trying to get up into that. And although you can force entries in here, right? I just don't necessarily like these type of entries. The high risk entries is what I would call them. To where we have a lot of equal lows sitting here. Price has already shown more than once that it wants to continue to return to the midpoint. Right, you'll also notice that anytime we're clearing a high, it's a wick. Right, so the first time that we run this high, we can only wick it. Same with this. Right, we will run this high, we can only wick it. So I would still have the underlying premise that we should get into here, but I'm fine letting price move without me, right? And kind of just watching a leg form. If we were gonna go long, it would be like this. Using the fair value gap, I would technically use midpoint of it. My stop would be right under this candle, and we would aim for like a little 1 to 2 like this. Just something quick. All right, so this would be a theoretical entry, as I said, not taking it because there are a lot of other things going against the idea that we want to go higher. Or even to put it better, right? Even if the idea is that we want to go higher, price action itself isn't moving in a clean fashion that should respect PD arrays the first time. Have I heard of Patrick Wyland? I have indeed, yes. His trading style is, I mean, it's a style for sure. I don't know. Obviously, he uses, I would just call it retail logic, but he seems to have success, so can't knock it, right? I'm not necessarily someone that thinks you need to trade a certain way. Sure, I believe that ICT's concepts give the best precision, and right, they're the, we'll say, true nature of why price is moving, but if you're making money trading, brother, good on you, right? I could care less how you do it. Now, the personality, that may be something different, but we'll stay out of that topic. Right there, perfect example of why we do not try to enter on fair value gaps like that. We go back for the equal lows after wicking highs again. So yeah, just real ugly. It's 1050 right now. So let's see, at 1050, we've actually cleared this low. So I am interested to see if we do want to come for this high. Maybe we'll do it in the next few minutes. If not, however, right, and we still get that displacement lower, I'd kind of see this as starting from down here. That's one. Oh, that's not the right thing. What's it at? All right, I'd go one here just because we don't really get a pullback. Oh my, I forgot how to use TradingView, bro. Am I dumb? One high, two highs, still holding the low, right? Third high. So maybe we come back low like this. Right, so this is kind of the structure, the framework of those three drives. 1, 2, 3. Within the 1050 to 11 o'clock window. We did close below. Look at that. First candlestick to actually close below. Right there. This is different than this, right? Because we open and close on this level, where here we open and close below the level. So actually, with the volume imbalance, we'll actually try a little short real quick before we hop off. I'd prefer, no, I still prefer actual hard close below this low, because that would be a large fair value gap. So yeah, we're just going to keep following that. Right, if this macro wants to deliver us into either liquidity or an inefficiency, I would expect that from here. We would want to reach to, my eye immediately goes here, right? That's a straight up liquidity void. There was zero price delivery in that section. Right, you'll notice when we open with this candle, there's not even a wick that attempts to return back to where we closed. So full void in price there. My eye immediately draws to that. If price wants to dig into that, or for an inefficiency, right? If we're going to go for liquidity, well, I mean, sure, we have short term here, but really we don't have liquidity until we get back all the way to that 830 level. Yeah, we'll wait till 11 and we'll call it a day. See what we get. Oh yeah, NQ with the 3 drives as well. Yeah, it could be setting up bearish here, to be honest. Right, only thing we would need is true displacement. Relying on a candlestick like this, especially when price has already shown that we're kind of just wandering. Right, I'm not necessarily in a rush to do that. Now, let's say that price has been showing all morning that we're delivering in a very methodical way that's respecting PD arrays. Then I would trust something like that a little bit more, but I still like the idea of this, right? Volume imbalance, inversion volume imbalance potentially, to then just go from volume imbalance here into this volume imbalance here. And something like that, right? So you did want to take that. Office plenty. Next stream will be tomorrow. Tomorrow morning. Or, actually, hold up. We have FOMC. I forgot. At 1 o'clock. What time is it my time? It'll be at 1 o'clock my time. So we'll do after FOMC. We'll stream at like 2 p.m. Oh wait, technically it would be 3 Eastern. So just power hour. Right? That's what we refer to as power hour. It'll be a power hour stream. Thanks, Justin. Glad to be back, my guy. It's been a minute. Look at that. Yeah, see, this is just hideous. I still like this. But at this point, right, you're just trying to fluff your own ego, saying, yeah, if I get there, we get there, cool. I'm not interested in pressing any button. See if we can respect one of these PD arrays finally. Right, we're getting held, by the way. So let me just show you guys a higher time frame. I always like that 15-minute chart. We often say, right, external range liquidity or just liquidity in general. If we're going to get held from reaching into that, we look for the last PD array before that. So in this case, if our objective is previous day low, right, we have a premium fair value gap that's sitting right below that. So if price is going to struggle to reach into there, we're going to get held at that last premium. That's kind of what we're seeing here, right? I mean, look at that delivery. Perfect high into the low of it. I mean, absolute perfect to the tick. Perfect delivery into the high of it. And really since then, right, just reverting between that 15-minute and the old buy side that was also the midpoint of our regular trading hours gap. RTH gap, I'm just going to say that. You understand what it means. Regular trading hours every time. It's too much. All right, 11 get here so we could leave. This is terrible. All right. Well, yep, we're going to wrap it up there, fellas. As I said, I still think we can get into this level just because it's aligned so nicely with the 3/4 level of that RTH gap. But for us, we're content. 3 entries, as we mentioned this morning. 2 losses, 1 win. But the beauty of trading is the winner outpaces all the losses. So profitable day for us. First day back, enjoy it. Oh, we're gonna run right now. That always happens, right? As soon as we say we're leaving, hold up. I forgot, that's the classic shadow trade. We say we're leaving, price runs. What we expect. That's funny. Yeah, we're good. But yeah, good to be back, fellas. It is just a start, so we'll be having a lot more streams in the future. But yeah, until tomorrow, take care, everybody. The 10 goodbyes, you already know, Mike. And yeah, we will talk again. As I mentioned, we'll do it after FOMC, so I'm not really going to try to get in there before that. So we'll be back for Power Hour at about 2:55 p.m. Eastern. So for those that will be there tomorrow, I will see you guys then. Until then, take care, everybody.